Analysts at Parthian Securities expect mixed to positive sentiment out of the equities market due to the continued strong demand for stocks with solid fundamental metrics. Meanwhile, Nigeria's President Bola Tinubu will today ring the closing bell at the New York Stock Exchange. Chinazom Izuora, Senior Associate Investment Brokerage at Parthian Securities, now joins me to discuss drivers of today's market sentiment. Chinazom, thank you so much for joining us on the show today. In a couple of hours in the United States, we're expecting President Bola Tinubu to ring the closing bell at the New York Stock Exchange. And this roadshow really is to entice, stimulate foreign investment and just reintroduce that pull we'll have from the United States when we're talking about investment flows into the Nigerian economy. Let's take a look at the significance of today's outing for the president, what this means for the NGX. They're also present there.
Yes, thank you so much for having me. I believe the move on the part of the president, and this is being facilitated by the Nigerian Exchange and the U.S. Chamber of Commerce. It's a very good move. The market, the capital market, is about confidence, and the more transparency or the more information investors have about the market, the more confident they are in the market. So I do believe that the meetings or the visibility the president has been bringing to the Nigerian economy is very good. What we'll be looking for is better publicity management from the current administration and consistency in the messaging, so that there's also that confidence that the information being given to the global community is accurate and that investors can make decisions on the back of that information.
And for some analysts, this means that Nigeria is also ready to do business, consolidating on the early mentions we had from the president, where he says that, well, more reforms are coming underway to stabilize the Nigerian economy, and this is the best time to do business with Nigeria. But let's talk about the investment sentiments we have here at this point in time. One of the big stimulants for today and just yesterday is also the financial release from O&O as well. Now, although this dates back to the 2021 performance, the market seems quite welcoming with this news. How do you see things panning out for O&O, and then looking at the sectoral performance for the rest of this month as well as we are closing the third quarter of this year?
So the rally in O&O is quite interesting, and of course would encourage those participating to do so with caution. At the beginning of the year, with the liberalization of the FX, we've already seen a rally in the market, especially in the oil and gas sector. We've seen companies like MRS reach all-time highs, right? And that hasn't happened in O&O because of the information in the market that proposed the listing and the release of their audited financials, the 2021 audited financials. And I think more recently, the information on the acquisition of any sort of spot transactions in the shares of O&O. But we're still cautious because we're waiting for more information and we're waiting for the outcome of the cut of that board meeting. So those participating need to do so with caution and, of course, implement risk management practices.
And talking about sectoral performance, let's also look at the impact of FX volatility across board as well. Now, we know the impact on banking stocks as well, and then for consumer goods as well. Now, this widening spread definitely also impacts operational costs and how much they have to take on when we're looking at headwinds. Let's look at the sectoral performance, banking, insurance, oil and gas. Your thoughts on these, how we're moving forward?
So the banking industry, we've said since this started that the banks were going to be the winners in this particular, and it has played out. We've seen massive FX revaluation gains in the audited financials that are out so far. But with the consumer goods and industrial goods, we did predict it was going to hit them hard due to higher operational expenses, particularly for the consumer goods. In addition to the FX strain, consumer wallets are strained, so they're going to see lower consumption. So those companies, they've suffered this year, but what we should be looking at is what proactive measures are the management of those companies putting in place. We already saw news recently that Dangote Dangote Cement actually said that they are going to cut their reliance on fuel. So I think we're going to look to adopt more renewable energy in their operations.
Yeah.
Those are the type of things we expect industrial and consumer goods companies to be doing this period. They've already been hit this year. Their numbers are not going, there's no magic they are going to do in 2023. But the things they put in place this year are what's going to impact their performance next year.
Yes.
So I think when we're looking at the positioning of the companies, what they're saying, we'll be looking to see who's proactive, who's putting things in place to manage this cost going forward. A lot of them are going to be able to pass some of those costs to the customers, but the more they try to push the cost to the customers, that's going to put more pressure on consumers and most likely reduce their selling ability.
Yes, Chinazom, now wrapping up the conversation, let's also take a look at your stance as well. You expect the market to remain mixed or tilt towards the positive line of things. But as we're waiting now for the US Federal Reserve next move as well, talking about rate hikes, Ghana's MPC is also having deliberations already. Nigeria will announce a decision tomorrow. I said tomorrow, next week. And under this new governorship of the new CBN governor now, how do you see these reforms also? Are you still bullish or are you still optimistic that we'll see this trajectory tilting much more sustained to the positive run on the back of the next moves we'll get from the MPC under the new governorship?
Well, okay, so the new governor, it's quite interesting, like his background. He's someone with capital market experience as well as economic experience. So we're expecting to see good things coming from the CBN under the new dispensation. In terms of the MPR rates, the monetary policy rates, our expectation is that they're going to hold because though rates are going up in the US and there might be some pressure from foreign investors for us to raise our rates, the higher our rates are, it hurts our industrial and consumer goods companies.
Yeah.
So it's a balancing act. It's a fine line. Already, of course, your rates need to be high to provide that risk-free premium for foreign investors to come in, but you have to balance that with local businesses being able to access credit at competitive rates. And I think already we saw in the audited financials of some companies last year, massive finance cost.
Yes.
So that's really something we have to balance out.
Yes. And while we're also waiting for this as well, so many have their eyes fixed on the earnings from Access Holding as well. We're expecting that to come by the 30th of this month. So for now, we'll leave the conversation here. Chinazom, it's been a pleasure speaking with you. That was Chinazom Izuora, Senior Associate Investment Brokerage at Parthian Securities.